Check out the video description for details. It's Thursday, December 14th, and I am going to give you a quick update on the kids' portfolio. We're also going to talk about a stock purchase we're going to make from this month and look at some news that's upcoming with Disney. Potential big news for them buying up Fox. So let's jump right in to the kids' portfolio. We'll get an update on that. Performing pretty well, and we'll look at how well it's performed versus the GAMR ETF. The GAMR ETF is the ETF that tracks the video game industry. A lot of people are interested in that one to see how well it performs. So we'll take a look and see how well that's doing. But let's start with the kids' portfolio. GameStop had rallied pretty good to where it is up almost towards $20 a share. It's dropped back down to 18.5 or so. So it's slipped a little bit, but it's rallied. If it does break above 20, it's going to run for a while. So it's lagging. We collect the dividend. We think it'll be flat for the year. GameStop, good stock to own, we think. And it's finally bounced back. Apple's up 20%. It's their largest holding. Nintendo is up 87%. That's probably our best performer. AT&T, until the Time Warner deal is done and through, they've been lagging a little bit. But we like to own AT&T stock. Disney is up a little bit. Missed the boat on buying some more of this one with the news that they'll be acquiring Fox. So still maybe a chance to buy a little bit as it runs up again, but Disney could have bought some more. We missed an opportunity there. Activision up 18%. WWE, this was the stock that was lagging for us for the longest time. It was in the red. They have rallied a ton. Is up 51%. So great performer. We think it's like owning a monopoly. Collect a dividend on that. Great stock. Qualcomm. After the takeover bid, they've been up. Collectors Universe is up 13%. Seagate back in the green. Coke is up 5%. Hasbro's been lacking. That was a target to possibly buy this month, but we'll get to what stock we actually have bought this month. Hasbro below 100. We like it. Just not where we put in a bid for it. I don't think it'll hit tomorrow. Really, really low. That's what happened with GameStop when we ended up with more. It actually dropped way low. We were going to buy some Hasbro, but ended up with GameStop. But I'll get into this month's stock purchase a little bit. Square Enix up 55%. They have not rolled out all their big guns for the Nintendo Switch, so we expect them to run up some more. Sega is lagging a little bit. We'll see if they get some traction here. McDonald's up 12%, and Foot Locker was a greedy purchase for the dividend. That's bid us. It's down like 4%. So overall, kids' portfolio is doing well for the year. I think it's close to on par with the S&P, about 12% almost. So not bad, not best performance, but pretty good for the kids. The GAMR ETF. Let's pull that up. It is smoked how the kids have performed this year. Let me find where it's up for the year. Pull that up here for you to take a look. I'll bring it up full screen. It's up like 50%. So this is the ETF that covers the gaming industry, and yes, it is up. For the year, it's up 55%. So it has solidly outperformed the Kid Broker stock. You get a pretty decent yield on it, 0.5%, but it's been up 50%. So nothing to sneeze at there. Its holdings, you can check it out. Its top one is WebZine, Glue Mobile. Take-Two is the biggest well-known one that they have, and then Square Enix, Ubisoft, Nintendo, Capcom. Those stocks make up almost half of its holdings. Really surprised Activision isn't up there higher. Surprised to see Capcom up there. Not surprised on Nintendo. That's definitely a good one. Ubisoft we don't like, but they've run up pretty good. Take-Two I can see, I can understand, but it's an odd group that they have. I don't like some of them. They don't pay a dividend on some of those stocks. Some of them I don't like. Dividend yield is much higher on the kids portfolio. It's almost 4%, whereas the ETF it's 0.5%, but it's up 50% versus the kids almost 12%. So definitely a solid choice. Don't shy away from GAMR. GAMR is the stock symbol if you want to get it. So looking at this month's stock purchase, really like the Xbox One X. We've talked about numerous times Microsoft and missing the boat on them. I really think there's an opportunity for Microsoft with esports, and I like the Xbox One X. I prefer the Nintendo to it, certainly, but it has definitely taken time away from the Nintendo Switch. 4K gaming, the system is quicker. I've been playing a lot of Call of Duty World War II on it, so it's pretty good. Microsoft, let me pull up their stats here. The PE, little high, a little higher than it's been lately. It's been usually in the low 20s or so. I think it's almost at 30, so it's pretty expensive compared to what it's been. If I can pull it up full screen here. So forward P's 22, trailing's 29. So fairly in line with the S&P. Its dividend yield's not too bad. It's at around 2%, so not bad there. 133 billion in cash, only 88 billion in debt. So their balance sheet looks pretty good. Free cash flow is 9 billion. So sound there. It's just a matter of catalyst and growth. I think they're doing well. Obviously, in their software and computer space, they do well in. But I think esports in their system, I believe they may be able to structure something where they take a good chunk of the esports market. We also like Activision in this space. So Microsoft had put in a bid for 3 shares for this month's stock purchase for the kids portfolio. We'll see where that lands tomorrow, and I'll give you an update next episode that we'll do. And we're also going to start looking at Disney and 20th Century Fox. It was a huge deal, Disney swiping up Star Wars, Indiana Jones, those franchises from Lucas. It seemed like a huge price tag, the billions that they paid there, but every Star Wars movie is cranking out $1 billion, and God knows how much in merchandise. So well played by Disney. We like Disney. We like their stock. Getting a lot of buzz for this deal with 20th Century Fox. It can mold several universes together with their movies and things like that. So we've talked about Disney and their billion-dollar movie franchises that they're cranking out, and that's not going to slow down anytime soon. So we'll get more on Disney as it comes out, but that's it for this show. Thanks for watching. Give us a thumbs up if you enjoyed it. Subscribe if you haven't already to get the latest investing news for gamers. That's an update on the kids' portfolio. We'll see you next episode. Thanks for watching.